This is Justin Pulitzer. It's Wednesday, October 8th, 2014, and it's, if you notice, not a Sunday. Doing a special midweek update just because the markets have been so volatile, and I thought it was appropriate to do a supplemental video, so let's do it. So, what's been going on? What the hell is going on here? Back and forth, up, down, these big violent moves. Let's discuss it. So, I had discussed a while back that this day here was very key, this Fed day. We had this Chinese liquidity event here, followed by a bit of a stalemate doji at the top of a range after the Fed. And we had a bit of a look above and fail and came back down very hard. And we've been just really in these big choppy bars. So what's really been happening here is you've been having a lot of people pressing on the lows, getting themselves overly short, disappointed with these big rallies, and then these subsequent breaks. I had been playing this day long, as I had discussed, and I wound up taking profits up near the high. This was a really big rally day. I don't know if people even remember it at this point just because of this huge context. But this was a really big rip-your-face-off rally, and I had decided that because we came up to the lows of the Fed day, it was time to take some profits and just kind of see if we can work our way up. My trigger there would have been if we got back over the 20, but we didn't even make it there. We came down real hard this day. This day to me was a little bit surprising considering the strength of the prior day. I did think that there'd be some type of a back-off, but I didn't expect it to be quite this severe. We came through the 50, and then we kind of tried to rally back up, and this downtrend has just been killer, right? It's held the market. So I had discussed in the weekend update that this bar here wound up having a lot of excess. You can see this big tail, and this should have been the end of the correction, so to speak, if the market was to be really healthy. And we rallied back up, and we gapped on Monday, and we gapped to the downtrend and to this 50-day moving average. And I had discussed it on the stream that this was a mechanical short, and everyone else, of course, I guess, looked and saw the same thing because we came down pretty hard. And shorts here had good location, so they were able to kind of hold the trade. And what you wound up having here was a lot of follow through with a lot of chasing away from bad prices. You can see I have the VWAP in here, and you can see we got really extended from it on this day. And then today you had a lot of responsive buying down at this low here. You can see it actually stopped one tick ahead of the other low. And it was, this again shows the responsive nature just because there was an initiative. If there was initiative nature, we would have tested here and then came back down. And I had discussed that this breakout zone was key. But in my weekend video, I had discussed that I want to see if we make a higher low and then to see if we make a higher high. But what we wound up doing here was something even more powerful. In this chart pattern, and that is making an equal low, and it makes this low here even exponentially, in my opinion, more powerful because it's now held once and twice, and you've had huge reversals off of it. So this low here better hold. If this doesn't hold, we're going to come back down here, I think, in almost free fall fashion to retest somewhere in this breakout zone, probably to the 200-day moving average. It may even get violated back down even into the 188s. Let's see what happens with that, though. It's a little bit too early to get involved there. But what I've been discussing in the market really is the market having to make a lower high on a separate leg. If we can take, we saw that this low was important. We want to see how important this high really is. I have a suspicion it may get tested. We'll see, though, because again, like I said, this downtrend line has been really important. Although we have tested above it before, maybe we get another test of the 50-day. The more times something's knocked on, the more likely it is to give, and we'll see what happens. This high here, I have the alert set. You can see it 197.60. If that high holds and we wind up chopping, that's going to be more bearish to me because it's signaling that we're building value lower and that there aren't, more quote-unquote buyers up above. But if we can take this out, the key is going to be to see how high we can go. Will we make a lower high and roll over? Will we make an equal high and roll over, or back off a little bit and consolidate and then go higher? Or are we going to make a new, or just make a straight new high? The pattern, for years at this point has been this crazy grind with these smaller, higher highs, and then these big pullbacks, followed by these amazing rip your face off rallies to marginally higher highs, and then these big pullbacks again. So we're still at a higher low from the last time, so that's still signaling that the market is quote unquote bullish. So like I said, I'm looking to see if we can get that rally and see what happens, if we where that tops out. IWM, I had discussed being a short, and I had also discussed covering it. I didn't reverse and go long just because I didn't like the nature of the weakness in it relative to the rest of the market. But you can see we made lower highs here and then higher lows, and I had said that this was going to be a go with. Either if we broke out above here, it was going to be filling up the triangle to the upside, and if we broke down here, we'd be filling up the triangle to the downside. And we wound up breaking, and I said it was a short, and we came down. I also said, though, to cover here at these reference lows. We did wind up bouncing, and we came back up to where this breakdown was, but we came back down again really fast and made a lower low. And then I had seen, and I had mentioned on the stream last night that I thought people were getting a little bit too bearish, and that I said my biggest fear, amazingly, with that this was becoming a crowded short. And you can see it kind of is. I mean, you came down here, and you wound up having this look below and fail with a outside day. Now the question is going to be is how high can this rally? For me, an ideal short would be is if number one, if we take out this bar, I think we're going to see 103 really fast. That's a gap fill. I'm going to show it to you right now before I go any further. Let me take out this VWAP. It's making the chart a little too muddy for my taste. I already get enough complaints that I have too much stuff on my charts. So you can see here there's a gap. I think that it would also coincide well with this other uptrend line, which is more of a primary trend. If we can come into there, I think that there's probably another bounce play for a little higher, but that would just be in the context of a very weak market. What I'm really looking for though is a short setup on the backside of the prior of this wedge. Like if we could come up here and it would coincide with one of these 38.2%. Oh wow, this didn't. I have to adjust this. I didn't even adjust it for the move we had today. Let's do that now quickly. Oops, I can't see. That's 105.76. The platform actually had crashed on me, and these charts they didn't save the update, so I'm sorry, but I'm doing them here for you guys in real time. Let's see. All right, so ideally we could you could see on this larger time frame we're coming down, and this 38.2 now would coincide really, really well with the backside of this area. So I'll be looking for some, and I'm sure these moving averages will wind up coming into play too. I'd be looking for this area to try a retest of a short just for a back off. The market's been very volatile, so what I've been doing is trimming up my size and shortening my time frame a little bit. So I'm kind of looking for, I guess, more like singles and doubles than I am home runs. So that's just what I'm looking for with this IWM. Let's take a look at some of the MoMo. Apple, I had discussed today on the stream, and it was before the big move, which was really nice. I know a lot of you guys took it. Kudos. I'm glad you had faith in me and in my setup, although it was a pretty good one, because you can see I was discussing buying Apple around here, saying that it was a really reference low. You were at the low of the channel. You had this hammer here. So you were really risking maybe like a point or a little less whenever you wound up getting in. When I tweeted it, I actually wasn't fully in the trade, and then I wound up getting into it. I wound up getting into it once we covered this the body of this bar, and then we were off to the races. So My opinion now with Apple is that we did break this secondary downtrend line in the course of this up channel, and we came up to the and closed over the 20-day moving average, which is good. I always like to see momentum stocks when they're over the 20, but we still have this more dominant downtrend line, and we still are making lower highs. So I think if we can break this here, this would be the next leg up to retest into these highs, and then fill up this triangle up to the old high, and maybe even get up to the channel high, which would be real nice, right? Because we have great trade location here, so we can probably deal with a little bit of chop. I don't want to give up too much though, so let's just keep raising stops, as we go. You don't want to see more than half of this bar get taken back. So that's the key for me with Apple. I know Carl Icahn has been writing Tim Cook love letters again. God knows what he's going to talk about tomorrow. We'll see. And then there's an event coming up, and then earnings. So let's just keep in mind, just keep trailing up stops. Facebook, I had mentioned today for the first time in a long time that I was getting a little bit cautious on the stock because I didn't like what I was seeing here with making lower lows. With this the 50-day moving average, you can see has been really rock solid support, and today it actually gave a little bit, and we wound up closing all right. We wound up closing strong over the body and pretty strong into these bars. But for me to really feel a little bit more comfy here would be to see it get back over this 78.06. And if we can do that, then I think it's, we're probably going to retest a little bit higher. This bar here is also really key, this big reversal bar. If we can get over this 78.82, I would say Facebook is really, really bullish, and we're gonna go much higher. So I am bullish on Facebook longer term. I am just a little bit cautious shorter term, just because I'm seeing this pattern play out a little bit, which I don't like. But it's again in the context that we're still kind of holding this wedge. If we happen to lose the low here, just look for these trends to be support. This one has 100 MA, so somewhere between, let's say, it'll probably wind up rising. So somewhere in the 71s or the 72s probably should support, depending on how strong of a down draft the market. If the broad market has a downdraft also, but just in caution mode with Facebook, I'm still fairly bullish on the stock and constructive, but just in a little bit more caution mode. Twitter, on the other hand, has been the model for relative strength. The stock has been just a beast, right? The market's been correcting, and Twitter is at the high of the move. It's not at an all-time high, obviously, but it's been performing really well on this tape. You had a lot of top callers here this day with a bit of a reversal bar at the high of the range, and then today we took it out and closed strong, which is great. I'm looking for Twitter to book some profits somewhere in the 57.46 to 58.98 area. That's where this gap starts, and also the 61.8 Fibonacci retracement. That's a pretty big retrace of a move. I'd be just looking to book some profits, and then maybe playing by the dips. As long as we're holding this I guess uptrend from the earnings, it's all hunky dory. You could see we kind of tested a little bit below, but wound up resolving higher. And you wound up breaking out over these double tops in the range, and that to me is a healthy stock that has buyers. I've been talking about Google just being a choppy mess, and it maintains it. It wound up being a really great day trade today, which I guess I could discuss a little bit. Today we've been testing this 200. We came down lower. We kind of filled up this area to these reference lows and bounced pretty strong. Still in a bit of a downtrend. I have to delete some of this stuff that's on this chart. It's not really relevant anymore because this was from an older video. But I really am curious to see what happens now with this confluence of the 50 and the 20-day moving averages. It really needs to start showing itself. I think that it's going to have a resolution on earnings. I'm not going to make the earnings call in this video yet, whether I'm going to play it long or short, but just keep your eye on the stream for me with that. Google's just chop. Today I discussed playing it over the high of the day. Let's see, 1 day, 5 minute. And you can see what happened once that happened. We came down here, and then we were kind of rallying back up, and I said just, set the alerts over the high of the day, and once we took that out, it was just dynamite. I love those types of plays. You know, you're coming down to reference support lows, coming back up, and then taking this out and running the stops and getting this type of a move. So this wound up working really well. I know a bunch of you followed me in on that trade, and kudos because you guys got paid. Another one that's a little bit new to my world here, and one I have not been bullish on at all, is Coors. I've been noticing something in this pattern which got a little interesting to me. The stochastics to me here were overdone and starting to bend back up, which is always good. I always get a little nervous when they're at the top of a range here, like you can see what happened there. Here we were at the low and starting to bend back up. But more importantly, and what I really was keying off of, was that I had discussed actually buying it this day. I forget what my reason was on this. I think it was just because we were coming up over range and I had good location, and the stock wound up being a great day trade, and I took some profits. And then I noticed that we were coming down to the downtrend lines. Depending where you draw them, you can see we were either to it or just below it. And the back off here to me wasn't really significant. So I re-entered the trade. We had a bit of a move up higher, and it wound up kind of getting dragged with the market. But today we had a firm breakout over that downtrend line. You do have a 50-day moving average coming in, so and the beginning of this little gap. So there might be a little bit of might be a good area to book a little bit of profits. But I'm looking for a little bit of a higher move higher, trading into their numbers. So we'll see what happens. I'm just raising my stops today. You can see I had a pretty tight one, 74.64, which was just below this range. Would have stopped me out because I would have thought that the move was it was rejecting here. But we prices did accept. So we have to see if there's some confirmation here. If we lose this area, I'm trailing my stops up. I have, like I said, I have really good location on this. So I'm not really stressing, a couple of ticks here and there, but this does need to confirm over these downtrends. I am long and looking for higher, but obviously a little bit cautious. But I am liking what I'm seeing here. So Coors to me is a cautionary tale in longs. If we do come up, I'll be looking to book some profits here at the 38.2, and God willing, this would be amazing to get back down to the breakdown level here, which was 85.75. I'd be looking for really 84.70, so let's call it somewhere in between here and 85 would be amazing. That would be a great trade on this tape. One I've been watching, and my fingers are crossed that this thing didn't do something stupid today, like blow its brains out. And before my price entry was, I've been talking about getting long this price line down here around the 87-ish area, and you can see we were getting really close today, and then this bounced with the market. Fortunately, it didn't have a lot of relative strength, and we're still below these hammers. It could do something like it did here. Maybe we trade back up to the 20 and then eventually roll over. But I would like to, I'm looking for a buy somewhere down here. We'll see how that it may wind up having to be a right out short on the downtrend. But I'm really looking for a long buy, particularly if the dollar is getting weaker. These guys do a lot of business overseas, particularly in Europe. Although Europe's getting a bit of a recession, and I know that. Travel is probably getting a little bit curtailed now because of the Ebola scare, so that's probably been weighing on this stock. But yeah, for a technical setup, I am looking for a right out trade, down here. I'll probably do it by selling like $100 out of the money puts or something like that, with a short duration, and then any bounce will have price and volatility contraction going both in my favor. So thanks. I hope you guys benefit from this. If you liked the video, please hit the like button on YouTube. And follow me on Twitter. My handle is @JustinPulitzer. If you have any questions, just message me. I'm happy to respond.